Before we take a look at market activity, let's take a look at the broader economic picture here, the context in which these markets operate. There's a lot of focus on the upcoming elections from a news perspective, from a trader and investor's perspective. Just how much in focus is the upcoming elections?
Good morning, Alishia. I think the elections will always be in focus for anybody that has anything to do at all in the country, seeing as it's going to have a general impact on all activities in the country. But I think, like you said, as it stands right now, it's really more from a news perspective. I would think that gone are the days where you have significant fears concerning even the possibility as well as the outcome of those elections. I think right now the concerns are just about how smoothly a new dispensation is going to be ushered in. So from a trader's perspective, it's not really so much of a big concern for investment and decision-making processes and all that. Clearly, it's still a factor because you want to be in an environment where you can be assured of continued investment opportunities and a stable investment climate and all of that. But I think reasonably, going by the experience of the last 1-2 elections, I think those are reasonably well assured, especially for domestic investors as well as foreign investors who have been well exposed and who have interacted for a long time with the Nigerian market. So whilst it's always going to be a pertinent factor, we don't see it as more of we don't see it as much of a negative fear right now. I think the concerns right now, the focus really is on what's the smoothness of transition going to be, as well as in the run up to the election, and then after that, what sort of programs, what sort of planning, what sort of manifesto really are we going to get how that could set the tone for investment and climate over the next few years.
Also a lot of focus on fiscal activities, exerting some pressure on inflation, interest rates and the currency as well. What's your perspective on what we're seeing play out on that front? I think the fiscal pressures have been well documented, but just to recap, it's really a function of increased spending as opposed to any real shortfall in revenue. I think for the most part of this year, we've had crude oil, which is the major source of revenue for the government, well above the budget benchmark. But what we've seen is increasingly we've had government spending increase on so many different fronts, and this is exacerbated by the fact that this spending also bypasses productive processes, both in the generation of that revenue as well as in the spending. So government is spending a lot of money, but a lot of it is going into recurrent areas. A lot of it is going into things that don't enhance the productive capacity of the country as it stands right now. Yeah. And what you have in that kind of situation is you have a sort of vicious cycle effect on inflation. You find inflation trending higher despite a lot of efforts to bring it back in line. A similar story for interest rates, and more so, it also has a negative impact on the currency because what you have is there's a lot of money within the system, but will lead to new generation of goods and services. You find that it's sort of purchasing power of your currency begins to deteriorate, as well as the more you spend and all of those spending factors. So clearly, it's a problem that's been well documented. I think our position in-house has been made very clear time and again. Yeah.
That government needs to bring this under control. Clearly. What we've seen again from recent bond auctions where the government has tried to borrow has basically been that yields have continued to rise as interest rates are rising, as inflation has risen. Investors are demanding higher yield, so you have interest rates also rising. So all of that is a very big concern now, coupled with the pressure on the currency.
Very quickly, Adeolu, because here in South Africa, we've got Reserve Bank Governor Joe Marcus yesterday saying she's wary about the link that's made between, tight fiscal policy on the one hand and looser monetary policy on the other hand as a tool for faster growth and lower inflation. Is that at all a debate that's raging over on that end?
To some extent. The good thing about all we've been saying so far is government seems to have now become cognizant of the precariousness of its fiscal position. So you find some recent developments coming into play, government deciding to review import prohibition list, as well as finding ways to broaden its tax base, amongst other measures, which also include a forensic audit of the revenue sources of government